Hi, and welcome to the Stockscores Market Minutes for March 16th, 2015. This week I want to talk about the importance of raising your standards. It's common for traders to take too many trades. It's the fear of missing out that causes this. The fear of missing out is a powerful motivator for taking marginal trades, and this increases the number of losers we get. It ties up capital in these marginal trades, and it weighs on us psychologically. We should only take the very best trades, and by doing so, we will end up trading less, but actually make more. All right, let's get into this week's analysis. We continued the pullback this week. Thursday saw the attempt at a bounce as it rallied up to the top of the downward sloping channel and actually broke through it at that point. And then Thursday, we gave back some of those gains. So the key thing now is to see whether we can hold this low from Wednesday afternoon. So Thursday broke the upward trend line. Friday, a little bit of second guessing of it, but then on the end of the day on Friday there, we can see that an attempt in a rally, and that gives us a little bit of a rising bottom. So we could be seeing the end of this pullback phase, but it's still too early to tell. It'll be important to watch what happens next week. Here's a chart of the S&P 500 long term, and you can see that even though we've had 2 weeks of corrective action in the market, we really haven't broken that long-term bull trend. It remains healthy. The only concern that I have is that the top here that was formed didn't quite get up to the top of the channel like we see over and over again, and that could mean that the buyers are getting a little tired. I think it's more than anything a sign of rotation as money is coming out of the large caps with the expectation that interest rates are going to rise, and therefore they're moving into places where they can get a better return in the small caps. And here's the chart of the small caps, and you can see that this chart looks quite a bit more promising. It was able to rally back and actually close up this week while the overall market closed down. You can see the recent breakout through resistance. So I think that the small caps are in the very early stages of a longer term trend. After consolidating for over a year, I think this is going to be the area of outperformance, and I'm starting to see it in the individual stocks. There is a pickup in action. Here's the chart, intraday chart going back 1 month of the TSX 60, and you can see that the market really fell down and away from the trend line. That leads to a bit of a bounce back, but we haven't broken that downward trend line yet. We've got a rising bottom that is formed, but the TSX has work to do. It's really being weighed down by weakness in the commodity stocks, which of course is largely dependent upon the US dollar. We'll talk about that in a moment. Here's the TSX longer term chart. I would say a neutral chart. The longer-term upward trend was broken in the early fall, and we've been grinding our way sideways with a lot of volatility, a lot of uncertainty, and it's taking some time for the market to figure out what it wants to do in Canada. TSX Venture suffered a break of that cycle of rising bottoms that we've talked about over the last few weeks, and that puts this one back in negative territory. It was trying to make a base, but with the strength in the US dollar, the commodity stocks are really suffering, and that hurts this market more than anything, given that 65% of this market is energy and mining. Treasuries went parabolic. We've talked about that a number of times. It's now working its way back to the long-term trend line. When it gets there, it should bounce, but that usually means that the longer-term upward trend is over and will likely go into more of a sideways trending action in US Treasuries. The market is pricing in the expectation that interest rates are going to start to go back up again. There you see the US dollar. It went parabolic to the upside this week. On the suffering side was really the euro that went down parabolically as Europe starts up their quantitative easing program, and that is what's hurting the euro, causing the US dollar to be exceptionally strong, and that is what's hurting commodities like gold. You can see that gold now retesting the lows from late October, early November, and a cycle of falling tops, pessimism, sellers in control, really a market that you want to avoid right now. Oil also broke down out of that attempt at a bottom. You could see there we had been building a rising bottom for some time. Now the question is, does it make a double bottom or go through that green line of support? Right now I think that the sellers remain in control, and you have to be pretty cautious and selective with oil. The VIX has broken a little downward trend, but really didn't pick up as much as I would expect given the weakness in stocks. I don't think that there's that general fear in the market that there's something systematically wrong that can lead to a major correction. It's more than anything just the buyers are tired of buying those large cap stocks, the ones that are paying the yield, with the expectation that interest rates are going to start to go up. They're saying, hey, we don't want to own these things as much anymore, and they're starting to look for other places to go, and that's what's causing the pullback in the market, not so much a general fear about something really bad happening in the stock market. So long term, I remain bullish on U.S. stocks, bearish in the short term. We saw some signs at the end of the week that we could be switching that short-term outlook to neutral. Canadian stocks neutral long-term, bearish short-term, gold bearish, and oil bearish on both time frames. Stocks continue to be in a minor correction. We may see this end this coming week. Money is rotating out of larger cap and into small cap. The US dollar is extremely strong with no sign of weakness, and that weighs on commodities, including gold and oil, which should be avoided right now. Fear is relatively minor in equities. I don't expect a major correction, simply this minor one that we are in right now. Well, that has been the Stockscores markets for March 16th, 2015. Have a great week in the market and trade well.